Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Monday morning pre-market webcast. Okay, quick look at the daily, and then we'll look at the hourly. We traded down to 2144 last night, which is it was resistance last week, early on in the week. It was that area, that 43 to 44 half area that we were pushing up into, couldn't quite get through. You can see it there on the live chart, or on the daily chart here. It lined up last week with the red line there, the 50-day exponential moving average. So you can see here, you can see the highs on these candles. We've come back to test that, and we've moved off it a little bit. Now, what I really want to talk about this morning is I don't get impressed with the bears very often because there isn't really much to get impressed about. They blew trying to hold mid-band on the way up. They gave up the daily mid-band by 15 handles or so. But what they've done since then is battle back. They've been able to push back through the monthly pivot, the daily middle Bollinger Band, the 20-day simple moving average, as well as the new weekly pivot, which comes in this week at 21.52 half. So, on the hourly chart, look, here's your monthly pivot, here's weekly pivot. Mid-band comes through right here at about 55. So, you've got about a 2 or 3 handle range on a Sunday night, which very, very traditionally in the last few years has been an excellent setup for the bulls. Dip buyers come in, they buy it, we go. That's been the MO for a long time, and you can see they stepped in here to try to do that. Now, Europe opens, they take it right down to 44. So here's the 44 level I was talking about. You can see it was resistance back here, broke through, okay, on the Fed news. And now we've traded up well above the daily middle band and then back, okay? So for me, I got long last night on the test of daily mid band and weekly pivot. That's a trade I will always do. Didn't work out, but if I'm going to lose on a trade, it's going to be that kind of trade because the probability of the dip buyers coming in and defending that area and taking it back up to last week's highs are very good. Not last night though. So the bears don't impress me often, but they did what they needed to do last night. Now, as we head into the regular part of the day, the bears are going to have to hold these areas all day long and close below them. Their ideal close would be below 44. That's what they really want. If they can't accomplish that, they still need to close below 52 to 55 or 54, wherever the daily midband migrates to over the course of the day. They can't give these levels right back up. Okay? If you're the bulls, you want to take them back. You want to head back towards, I don't think you're going to make it through last week's highs, but you can at least give it a good show. If the bulls can't do it, let's hop back to the daily chart. What are we left with? Well, what we're left with potentially, if the bears can continue to push here, the full deal would be to break 2101 if they were able to do that. And what that would leave is a very pronounced lower high on all time frames. I don't care what chart you're looking at, you got a lower high. Weekly, daily, whatever, it's a lower high. Okay. That's a tall order. That may be too much for the bears to accomplish. They're going to need help. And when I say help, I mean news, some geopolitics. They're going to need help. What the bulls would like to do is just go ahead and hold 44, head higher, break back through. That seems like getting back to 21.91.5 seems like a tall order here as well. What we'll have to see over the next few days is what does price want to do relative to the weekly pivot. Right now we're just below. The easiest thing to do in situations like this is to watch the weekly pivot early in the week, see who wins the battle of the weekly pivot early in the week, And typically that is the side that you want to be on for the latter part of the week. So today for me is still really all about weekly pivot. The first little battle of the weekly pivot, the Bears have won. If during the course of this pop up here, we come back up here to weekly pivot and we can't get through, then that's an area that you got to think about getting short for a break of 44 and a move back to test probably this Fed reaction low. Fed reaction low and the Fed pre-print price of 35.5 would be the next logical area for me on a break of 44. All right, everybody have a fantastic day. Follow us at Twitter over at Princeton Trader. Check out the website princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.